Many hopeful home buyers and refinancers are hoping for the Fed to cut rates. But even if the Fed cuts rates, mortgage rates may not drop below 6%. For a few years now, the housing market has been in a bit of a stalemate. We've seen a lack of homes for sale, and homeowners who bought homes with low-rate mortgages are reluctant to move and take on a higher rate. Mortgage rates often drop in anticipation of a Fed rate cut, which we've seen recently. Mortgage rates hit an 11th month low, offering a glimmer of hope. It would likely take a much larger drop to motivate people to sell and free up inventory for buyers. Mortgage rates don't necessarily follow the Fed's short-term rates. They tend to track the 10-year Treasury yield, which helps set borrowing costs across the economy. The 10-year Treasury is generally a good proxy for mortgage rates, as most homeowners tend to hold their homes for about 10 years. Short and long-term rates typically don't move in the same direction. For example, last fall, the Fed cut short-term rates, but long-term rates rose, and mortgage rates rose also, as investors baked in expectations of larger federal deficits and higher inflation. The other issue is the premium that investors demand to compensate for the risk of owning mortgages. Because of the uncertainty around where rates are headed, this spread has been elevated over the last few years. It has recently fallen, but where it ends up will be key for mortgage rates. A Fed cut is a step in the right direction for home buyers, but it's not a guarantee that mortgage rates will keep falling. You should only commit to buying a home if you can comfortably afford the current mortgage rate on your current income. Don't rely on refinancing later, as it may not be possible. Many economists expect mortgage rates to gradually drop through the end of the year and into early next, but largely stay above 6%. A few in the industry say rates could dip into the high fives by late 2026. But those who've been predicting a big drop in rates have been wrong over and over again over the last few years.